Good morning and welcome to the Killik & Co market update. Markets have been a bit weaker this week, mainly due to fears about interest rates, particularly in the US, remaining higher for longer than previously expected. US government bond prices have been falling, and that makes their income yields higher. The fact that investors have clearly been selling these bonds suggests they do not expect interest rates to come down anytime soon. Part of the reason for this is the oil price, which we briefly talked about last week. The cuts in supply that we've seen from OPEC and from Russia have been pushing prices higher. And adding to that, the US has released data on its strategic oil reserves this week. The US has a stock of oil which it can use to influence prices, for example, by releasing reserves and increasing supply when it wants to bring the price down. This week's data showed that current stockpiles were lower than expected, and that means the US has less leverage when it comes to being able to increase supply and get those prices down. We've therefore seen a further rise in the oil price this week. Higher oil prices will put upwards pressure on inflation, and that will make it difficult for central banks to bring interest rates down. The green energy transition has taken a bit of a hit over the last couple of weeks. First came Rishi Sunak's decision to delay the ban on the sales of new petrol vehicles, and this has attracted criticism from car manufacturers who have already invested a lot in the development of electric vehicles. This has added to the uncertainty over the speed of electric vehicle adoption. Volkswagen this week announced that it will be curbing electric vehicle production at 2 of its German plants due to lack of demand. The shares have struggled recently due to concerns about competition from cheaper Chinese vehicles, as well as some problems with software development that have delayed the launch of 2 of its new electric vehicle models. So do give us a call if you'd like to talk about Volkswagen in a bit more detail. Back to the UK's energy transition, the regulator has just approved the development of the UK's last major untapped oil field. It's called Rosenbank, and it's about 80 miles off the coast of Shetland, and is expected to be operational by 2026. This is good news for the UK's energy security, but it's bad news in terms of carbon emissions, and as a result, the UK has been criticised this week by the International Energy Agency. And finally, a couple of interesting bits from the retail sector. Firstly, we've had results from Costco this week, which operates a membership model. You can't shop at Costco unless you are a member. This week, Costco reported results, and it had an increase in revenue as well as an increase in its number of members. While many retailers over the last year have been reporting huge increases in the level of theft, Costco hasn't, and part of the reason for this is its membership model. Its members have to identify themselves when they enter the stores, and this makes them less likely to steal. In contrast, Target announced this week that it would be closing 9 of its stores in major cities because the levels of theft have become so bad. So it's interesting to compare the share prices of Costco and Target over the past 2 years, and you can see there is a huge divergence. Moving on to have a look at next week, we are expecting results out from Tesco. That's it from us. Enjoy the weekend, and we'll see you next Friday.